Welcome back, and if you're new, then please subscribe to this channel and learn more about investing and what I call the China opportunity, investing in some of the US listed Chinese names. And in this video I will be talking about stock price targets, in this case about NIO Stock. So I know you guys love price targets. Usually everybody is referring to the analyst price targets, but what I've done here is I made a couple of different cases. So watch this video till the very end if you want to know more about each of those cases, and I hope it helps you to make up your mind for investment. All of what I provide on this channel usually is just the information as I personally see it. Also, please note I'm invested in NIO and other stocks covered here on the channel, so I'm biased by myself, of course, but I'm sharing my due diligence and I'm trying to do it in a neutral way as much as I can. Anyways, let's try and jump into this Excel sheet here. And I've done 6 scenarios here that you can see. By the way, this is a very, very basic Excel sheet here. So, of course, this reflects somehow how analysts think about stocks or bank fund managers and so on. But, of course, this can be much more thorough and deep and with many more variables. But this is not too much about this video, where we don't do super complex stuff, but I hope it still gives you something to think about. So what I've done here is a scenario description. For the first one here, it's the how today NIO is valued, and then the number of deliveries expected in this scenario, the average sales price, ASP in US dollar, the revenues in US dollars, and the price to sales multiple. If you watched my video yesterday, I used the valuation metric of the enterprise value in relation to the sales or the revenues. In this case, I have used the price to sales multiple because that's sort of a little bit more available, like on most stock analysis websites. If you go there, you will see the price to sales multiple, so you can refer to that. Market cap, so the capitalization, the valuation of the company in US dollars, so that's usually in billions, but I've used the whole number here, and then the share price. So that's what you see each day in your trading portfolio. So today NIO is valued for around about 120,000 deliveries. How do I know that? Well, the usual ASP for NIO cars sold is around about 55,000 US dollars per car. That's the average sales price. Of course, this can fluctuate a little bit, but for simplicity, I'm using that one. Like this results in revenues of 6.6 billion if you multiply the 120,000 delivered cars with this average ASP. And with a price to sales multiple that we're using, that is currently given to NIO Stock, which is 2, which, by the way, is a very low number for a growth company, but that's just the market that we're currently in, right? So if we apply that, that brings us to a market cap at which NIO is currently trading at around 13 billion, or translated into a stock price of $8, given that we have, I think, 1.6 billion outstanding shares, right? So this tells us that the market today thinks NIO should be priced at $8 because NIO at a price to sales multiple of 2 is expected to bring in 6.6 billion US dollars in revenues in this year, and that equals to more or less 120,000 vehicles, right? Now, I've made up here a couple of other scenarios. For one, that's the second scenario, NIO grows and the valuation multiple stays low. So this means the multiple of NIO is staying the same as it is at these historically low valuation multiples that it's currently in. But maybe NIO manages to deliver 200,000 cars at the same ASP. So that brings our revenue of to roughly 11 billion. And that would equate at the same valuation multiple to a market cap of 22 billion US dollars. So that is actually translating into a share price of 13.4 US dollars. That means, like, if you think this scenario is applicable, that NIO would be able to deliver 200,000 cars this year, a fair value would actually be in roundabout, this share price here. Now, the next scenario is that NIO grows and the valuation multiple expands. So, for example, there is a risk-on sentiment in the markets. Currently, of course, we're risk-off, which means all of the banks try to sell all of the risk assets that they're having, like crypto, Chinese stocks, tech stocks, and so on. All of those is getting dumped in the market because of the interest rates. So you can just park your money risk-free and get 4 to 5% interest, right? So this is why people are selling stocks like NIO. And still, if we say we get 200,000 deliveries this year, same ASP, so 11 billion in revenues, and let's say there is a risk-on sentiment, meaning maybe there is a peak in Fed rate hikes, and people now say, okay, bottom is in for the stock market, let's take on risk. That would actually translate into a 55 billion market cap at a higher multiple. Historically, we have been at this higher multiple, but currently we are trading much, much lower, as I explained before, and that would translate certainly into a share price of around $33. Another scenario would be the best case sales projection and a multiple expansion. So if NIO manages to grow to 250,000 deliveries this year, which I've seen is fluctuating around as a rumor in certain forums and so on, and I think some NIO officials claimed that. So if NIO were to deliver 250,000 cars at maybe a lower ASP, because maybe NIO has to introduce lower priced models in order to do that, but still that would mean that they actually go to 12.5 billion in revenues this year. And maybe simply because the growth is back, or maybe also the market recovers in general, we give it a higher multiple of a price to sales of 5. That would equate to a 62 billion market cap or an 38 USD share price. Now, there could also be the scenario that there is only a moderate increase in sales this year and a slight multiple expansion as the market is calming down a little bit in terms of, now the sentiment is very, very bearish overall in the markets. So let's say NIO delivers 160,000 cars this year at a slightly lower ASP here as well, and revenues should be then around $8 billion, and the price to sales multiple is slightly going up from 2, where we are now, to 3, then that would equate to a 24 billion market cap or a target share price of $14.6. Now, of course, I don't want to only tell about those optimistic cases. There could also be the case number 6, which is a further decline in overall sentiment of the stock markets. Maybe we see some additional things happening in the markets because of the Fed interest rates, maybe US-China conflicts, maybe the economy going to a recession. So overall, we would have to still decrease our sales multiple. So going from price to sales multiple, going from a 2 to only a 1.3 price to sales multiple for a growth stock like NIO. And at the same time, NIO is just staying flat, like 120,000 deliveries. Then it would only bring in $6.2 billion, and at this lower multiple, that would translate into a market cap of around $8 billion or a share price to $5. So, I just want to give an outline, a couple of these cases to how people would actually think of NIO as an asset, because ultimately NIO is an asset out there that can compete or has to compete in terms of opportunity cost. Do I put my money in the bank? Do I put my money in another stock? Or do I put my money into NIO, right? This is always the question that bank managers need to ask, or you should ask yourself as well. And then, of course, you need to make those projections where NIO will land. So as a bit of a context, NIO last year made around 120,000 sales. In the first couple of quarters or months, NIO, although has had not the highest sales in the first quarters, still is, I think, growing at a double-digit year over year. But one could assume also, or make the scenario, that NIO doesn't manage to grow further in the next couple of months. For example, recession in China, or the models are not getting accepted, or something else happens, and maybe NIO would stay flat on a year-over-year growth timeline. That would mean actually no growth for NIO, and that, of course, would be bad news. And I think this is currently what NIO is valued for. So basically, the market is assuming that there is zero growth year over year for NIO, and they will only make $6.6 billion US, and that's where the share price is sitting at. Now, of course, you could also make the other case that NIO might be able to grow in the second half of the year. So one argument would be that the automotive industry is cyclical. So usually Q3 and Q4 is where all of the music happens, and where most of the cars are being sold, not so much in Q1 and Q2. Plus, you have China coming out of the COVID issue just by the beginning of this year, and now sales momentum might be picking up. So maybe the consumer is getting, more happy about consuming stuff and also buying those higher tickets like premium to luxury goods and also houses and stuff like that. That could happen in the second year, but maybe we get also something else, like maybe another lockdown, who knows, and maybe the Chinese consumer is not happy to spend. Who knows? These are the scenarios where you need to think about. I would say that all of these scenarios are possible, but it's for you as an investor to attach probabilities to each of these cases and then see where is the potential upside or downside from here, and then kind of adjust your risk position in your portfolio and place your money where your bet is, in a way. Of course, this is kind of the uncertainty when you are investing in risk assets such as NIO. I think that's it from my side. You can leave your comments down below. Which of the cases would you see has the highest probabilities? Maybe in another video I'll do my answer on where I see it going. Anyways, this is more of a short-term thing, like 2023, right? If you know my videos, I'm usually looking at 2025, 2030 timelines, and have done business cases regarding this that are shared in my Patreon community. So feel free to join the discussion in our Patreon community. Anyways, I hope you found this insightful. Thanks for watching, and see you in the next video.